Hello and welcome to this special show where we talk about the markets and budget. And who better than the star portfolio manager to discuss all about the budget and the market, Mr. Porinju Veliyath. Thank you so much for taking out the time and speaking to Money Control. I'm going to start off by asking you about the budget, right? Because it just comes just a year ahead of elections and a lot of fears around the globe of recession. What do you think will delight or disappoint the market?
Yeah, thank you, Nikki and Moneycontrol for inviting me for this. Um, of course, budget, you know, is very different today than it was 10, 15, 20 years ago. The relevance of budget and, that budget-related activity in the stock market has really come down. The relevance has come down. As you know, it's, most of the things, most of the policy making happens outside the budget, especially in the last 5, 6 years. And of course, this is the last full budget before the elections. So expectations and people are looking for surprises, positive or negative. But I believe there won't be any significant surprises in this budget. There won't be any untoward negative provisions too. As far as investing community is concerned, I strongly believe. Already we have, the taxation in place on the capital gains. But I think finance minister has indicated a couple of times in the recent past about some tweaking. So some expectation is that it could be, in time frame wise. For example, we have a 1 year time frame for the long-term capital gains. It can go to 2 or 3 years, which is reasonable. I think most other countries are practicing it that way. But I don't think it is going to be any big negative surprises, something like that happening. Or the 15% of short-term gains tax makes made 20%. So these are not very important. This capital tax will go happening, but staying invested and creating the capital gains is more important. Investors should be focusing on that than paying the tax afterwards. So that is what is most important for investing community. Anyway, on the personal income tax,
you are expecting some amount of rationalization of durations playing out for LTCG that you think could be probably positive in coming in for the markets, right?
Yeah, some kind of rationalization among asset classes, in terms of capital gains tax. That is indicated already. It can happen, but there will not be any significant impact on the investors or investor sentiment because of that. Is what I strongly believe. And we have a personal income tax. That's very important because nowadays the dividends are taxed at that rate of normal slabs of personal income tax. We already have the very high personal income tax. It is taxed up to 43%. So it is in the 2019 budget, that with very above 5 crores, it's coming to 42.7% personal income tax, which I think it's 3-4 decade high in India. And this is more important because, after this taxation, people, when they spend, it could be 12%, 18%, up to 28% GST. And we are living in a system, we have another half a dozen or maybe 1 dozen other luxury local taxes beyond that. So in that kind of environment, some HNIs, I understand some of them are not comfortable. Some of them are shifting their businesses or place of residence to save on this, taxation. Because even dividend tax was up to 43%, 42.7%, which I think was brought down last year to 37%. And it used to be earlier 20 or 22%, which was taxed at the company at source. So
Sure.
there is nothing, there won't be any negative surprises. There could be some positive surprise, that kind of a high income tax slab could be, brought down. Some kind of rationalization or sobering could be happening.
Sure. I mean, we've spoken enough about the taxation for super rich, right? I think just 2 days before we had the FM speak about the middle class income tax slab and how that needs to be taken up on or discussed and considered in the upcoming budget. I do understand when you talk about the taxation of super rich, it's almost, we're probably more than what a US is, charging to the government is charging to the citizens. But also, there is this huge discrepancy within India when it comes to the super rich and the other, 99% of the population. So I would want to understand where you think would the market sense more amount of delight when it comes to the taxation.
No, Nikki, this 1% of population holding in a significant portion of the economy or the wealth, it is not only in India, it is all over. Globally, I think every country is like that. And, India is we are still emerging, but we are going very, very strong. If you see, we are talking about this high taxation or low tax rates. Now just coming to the equity part of it, how investors are making money, or creating wealth, or paying taxes. There is some data. India has almost around 8 lakh, 8 lakh millionaires, dollar millionaires in India. And I was just reading last week, Infosys at 40. Infosys has created 30,000 millionaires only through ESOPs, employee stock options. A lot of people have become millionaires by holding on, investing into Infosys stocks. And there are many other companies like TCS or many of the Indian large IT companies created maybe at least 2 to 3 lakh millionaires, dollar millionaires in India. And the taxation, whatever said and done till now, has been very low. Till recently, it was zero tax for the long-term gains and 10-15% for the short-term gains. So equity investing is the best way if you want to save on tax, to get the feel the compounding, the magic of compounding. So that is something amazing. And the way our economy is moving, into a very different kind of an orbit. It's something we all are looking at. We all are experiencing it on ground. So yesterday, our Prime Minister was talking in one of their party national meet. India's best era is coming. I strongly believe so. We have created the platform for that, the environment for growing at a much faster rate, and by all aspects. So India is poised to move into a different economic growth orbit, and we need that. We need that kind of a higher orbit and growth to feed our 1.4 billion people. It's not a small thing. It's a huge responsibility. And I'm very happy with the current regime, the way they have been doing things with the long-term, policy making. On an economic front, it's doing a fantastic job. And we are feeling it on ground. Every investor, every equity investor, everyone is feeling that. Now coming to the job creation. So once the economy progress happens at a higher speed in a bigger orbit, all those other things will happen. We cannot just create jobs for the sake of it. Economy progress only will create jobs.
Sure. We will chat about, you spoke a lot about the old economy stocks. You also spoke about, probably the sentiment that is ongoing right now. Because I remember in 2019, you wrote and read extensively to your investors, where you pointed that how the provisions that were presented in the budget were not good enough, and how that was a disappointing factor that has played out overall. But how are you gauging the sentiment right now as we go ahead of the budget? You think it's any different?
No, I'm sorry, Nikki. I haven't talked anything bad about the budget in general. So I have been talking about this high personal income tax of 42.7%. It's, first of all, it doesn't make a lot of money for the government in the revenue. It is only sentimental, when people talk India's personal income tax is 42.7%. then you have to pay so much of GST when you spend money, and there are so many other taxes. So, but this is not very important. This is not going to give any structural problem to our economic growth or progress. What's happening today for India? It's a decadal opportunity in terms of economic progress, and I am very confident we are doing the best to take advantage of that opportunity. The current, the geopolitical turbulence. Our geopolitical turbulence has been the highest in the recent in the past. If you see, in terms of again, the relationship between countries, the global trade, all those kind of aspects. So I think it is very much favoring India's economic progress going forward, and we have as a government, the current regime has done a wonderful job in that regard. You may be seeing that videos of our Jaishankar it's something amazing. India has never been that powerful in the past. We are feeling that power as a nation. We have a voice today in the globally.
You are sensing positive sentiment way ahead of budget, and in backdrop of that, and a little bit of geopolitical concerns that we're looking at that you've just spoken of. What do you think are the themes that you would now like to focus just ahead of budget, and also, towards your 2023 or, towards the next 2-3 years? What are themes that you would like to keep in your mind?
Yeah, if you are looking for this next 1 year, the 2023,
and
I was
also
listening to some, and also
ahead of budget, there's
budget,
this which is playing out.
Anyway,
infra which is playing out. Please go ahead.
There is no question of budget spoiling the party. I'm very confident. Except for some two small things, adjustments here and there. Budget is not very relevant.
What adjustments are you talking about which can make the markets go here and there in that case?
Yeah. That few hours, not even few days. Budget provisions will have only so much of impact on the markets. I'm telling you. I'm very confident about that. If there is some other reason, markets could go up or down. But in general, 2023, I don't think our Nifty or Sensex is going to go up significantly or go down significantly. I won't be surprised if we see after 12 months, our index is around this point, maybe 5% lower, 5% higher. So that way, I am not having any excitement. I don't have any disappointment because we have done very well in the last 2-3 years. See what's happening in the Nasdaq or many of these global markets. The blue chip stocks, highly respected companies, they have fallen by 30%, 40%, and some of them 60 and 70%. Very large entities. Some of them are like monopolies globally in technology. So in that context, and in the economic turbulence going on globally, and with the kind of rising inflation and growth, the demand coming down. So in that kind of an environment, India, its stock markets, its economy has been, it has been wonderful. We should be proud of India's, the way we have managed our economy and things. And we had a lot of luck factors also. Maybe government cannot take credit for each and everything. There was a lot of luck, many lucky factors for India. Especially with this geopolitical thing. Now the way we could buy, when this crisis came, the way we could buy oil from Russia at a lower price. A lot of things are helping us. And the way China is affected, so a lot of businesses are shifting to India. It's really happening on ground. There are many, some economists, they have been very much not very positive about India or its economy. They have been trying to give a narrative which is not very positive for the nation. But I can understand their concerns. Whatever they are telling is data-wise correct, but how you narrate it, that's more important. So a truthful narration, if somebody is looking at, I'm telling you, India is in a real sweet spot, and India is taking advantage of every possible opportunities globally, and with a long-term perspective. And as a country in the global arena, India has never shined so much. India has never become so powerful.
I'm just gonna play devil's advocate here and just probably gonna highlight some fact that we have seen some amount of FII sell-off in the first 8 sessions, right? Almost $1 billion of outflows that we've seen from FIIs. So technically, 2023 has not started on a very positive note when it comes to the FIIs. Having said that, what do you think? At this point of time, Chinese market with the way the aggressiveness with which they've reopened, you think that will have a bearing on the Indian markets and that will also lead to some corrections? How do you view the valuations right now?
Yeah, these are slightly technical aspects, Nikki. I would, when you say $1 billion FII sold, it's like just peanuts. India, or you suppose it is $5 or $10 billion. Still, it's just peanuts for Indian economy. The way we are moving, the breadth of Indian stock market, the number of participants, the number of intermediaries, the number of new fantastic businesses getting listed and coming through IPOs. We are in a the growth of capital market is tremendous. Now, India is a $3 trillion economy approximately, and even our market capitalization is around $3 trillion. We are talking about a $10 trillion economy. There may be Adani or Ambani may be giving some different figures. IMF may be giving some different, but we all are sure India will become a $10 trillion economy. We don't know when it's 20, 30, 35 or 40. That will be, I am not an expert on that way, but we are moving towards that with a much higher economic progress, the rate of progress. So when we become $10 trillion economy, even our market capitalization is going to be 10 or $12 trillion or maybe more. The Make in India kind of that themes, that ideas.
Right.
I think we and now what's happening in the defense sector, we are becoming a very powerful nation in terms of our manufacturing capabilities and our human resources. The biggest crisis globally in the Western world, in Europe or US, there is a huge lack of talented, trained manpower in various industries. There is a huge shortage. It's a very dangerous level. India has the talent in abundance. We are creating so many of talented, skilled labor and talented professionals year after year.
Right.
So we are even in that aspect, we are becoming very powerful. We are going to rule the world. Trust me.
Sure, that's clearly some amount of optimism coming out there from you, and that too ahead of budget. What do you think would be the small cap index returns? Do you think it's going to be a comeback year for small cap index? How do you think mid cap performs? Do you think at any given point of time this will be the year when the broader indices will probably outperform the larger counterparts? Your opinion on that?
In my understanding now, the so-called small cap index, mid cap index, they are not really representative. I think some of them are 50, 100, 200 companies. When they do well, they are brought into the, some small companies brought into the small cap index. Maybe at the peak only they are brought into the index. So, when it is coming into fancy, there's more volumes. I don't know what all are the parameters for them to enter the indexes. More importantly, we have a lot of valuable old economy companies, stocks,
Right.
in our market.
Right.
I think it's 2023. A lot of them are booming up already. You might have seen since the pandemic year, 2020.
And probably talk about their valuations. What do you think about it? Because I think old economy stocks are something that you've spoken enough and more. So do you think at this point of time, any few stocks that you'd want to talk about in terms of their valuations?
I think I had disclosed about a stock we are holding, our largest holding in my portfolio management, and AIF. We are in two schemes, and it's Raymond's. When everybody was ignoring Raymond because it was not an IPO, it's a very old company, old-fashioned. The perception on the management was not great in the market. So investors had a lot of apprehensions about such companies, not only about Raymond. So now see how they are performing. There are such valuable businesses, very relevant for the future kind of business models with hugely asset-based companies. So some of them are going to be 5 and 10 baggers from here in the next 2-3 years. That's what I'm looking for. That kind of potential is there in that small and mid cap. Now, when the regulator has made some kind of small cap, mid cap differentiation, large cap differentiation for the benefit of mutual fund schemes. What
Right.
kind of stocks can be in their schemes.
Right.
So today, even a 13,000-14,000 crores market cap company is a small cap in India.
Right.
For me, it's a large cap company. So it's all depending on the investors' mindset and how they look at businesses and companies. Now we have a 5 lakh crores market cap and a large cap company. Maybe it is going to be struggling from that level of base to grow to a 10 lakh crores market cap. Whereas a 2,000 crores cute company out there, which may be, into a niche business, well managed, and, for them to become 5 times from 2,000 crores market cap to say 10,000 crores market cap, it may take the same time. Then the large cap from 5 lakh crores becoming 10 lakh crores. But investing in smaller companies, the risk element is much higher, that we all know. But I strongly feel those who directly invest in stocks should not miss this special opportunity in India to create wealth, significantly larger, rate of wealth than the large companies. I think that time continues. We have many companies
Which
since the
pockets, according to you, look more attractive right now, even from a small and mid-cap theme perspective? You've spoken about old economy and you've spoken about Raymond, but if you just further narrow it down and talk about few more stocks that we have, probably from the mid-cap space and small-cap stakes, which still look fancy, even in terms of the valuation and the fundamental picture, what would those picks be?
I don't want to recommend any stocks
Sure,
at this
it's
point of
not a
time.
recommendation for
In
sure.
individual,
It's just going to be a
but
broad discussion of what you think is fancy right now in terms of the valuation.
see, one thing I found, the new IPOs coming up in the last 2 years, 3 years, in general,
Right.
they are coming out with IPOs at either at fully priced or richly valued kind of evaluation,
Right.
and some of them are coming at a exaggerated, more than reasonable kind of a valuation. And and this even after being highly rich, having rich valuations, these companies, once they come with IPO, and even after the IPO, they are fancied so much in the market. A lot of gullible investors go and buy at very exorbitant rates, and I think many of those companies have come down. Many of them have come down by 30%, 40%, and 50%. Those companies may be very good, but
Right.
they created a valuation today which is worth a valuation after 5 years. So some of these companies could be good, but at what valuation and what price earning multiples, even comparing with the growth. So there could be huge time-wise correction in these kind of companies. I was really surprised how so much response was coming to these IPOs, and even afterwards. Some of them wonderful companies, but much more valuation than wonderful companies. So I think that is getting corrected. We are going through that kind of a period of time now in the market. Investors might have learned a lesson not to buy at any price, and but everything will get consolidated, and we will continue our progress and the journey in the market.
Sure. Anything you feel looks interesting when we're talking about these new age companies? Because we've been hearing that Oyo is probably refiling the papers, and we also have Mama's valuation, which is believed to be 1,600 times PE of the previous year profits. So I was wondering, what do you think about such IPOs? You think it looks fancy, even if it's kind of having this rich valuation, people should still look at it? Or you think we are now looking at IPOs which have started demanding rather lofty valuations?
I also heard a lot about Mama Earth. The social media, it was full of stories and memes about around that company. I don't know whether they have really finalized the valuation of the company. So I can't comment without knowing that. But one thing is very evident. My advice to investors: look for the listed companies, old economy stocks, not in fancy, and study their businesses. A lot of them are very much future relevant businesses. And the biggest risk aspect of these smaller companies and old companies are the management aspect of it. And that is where I see a lot of positive. Many of these, those so-called unprofessional, unethical promoters, and they are changing. There is a structural change happening, a transformation happening in the attitude of promoters, management in many of those old companies. And one particular reason for that is the new generation, they have come up and they are taking over the companies from their dads or, from the family. And some of them may be well educated. They know the culture, ethics in US. They might have gone studied in Harvard or Boston somewhere. So when they come back, no, they are taking over the charge of the companies, and they understand what typically his father was doing, siphoning out money, not sharing, not willing to share the wealth with the minority shareholders, no respect towards minority shareholders. So he understands, that is not the way to lead a company, to create an institution, to create wealth through market capitalization. So that realization of the new generation taking over companies is a very, very important factor for investors to look for in the coming years. And one by one, you will see, dozens of companies coming out of that old style management and shell and going to the new gen style of management and progress. So that is where you can make, 5x and 10x with your capital. I think India is still having that kind of opportunity.
You flagged off the corporate governance issue overall for some part of the companies, and in the last year we've seen how the whole thing has played out between Paytm and Nykaa. We've seen the whole corporate governance issue around those two companies, right? What's your assessment on companies like this? What is your view?
Now, Paytm and Nykaa, I think they are basically overhyped. Whether it was created by some vested interests, I don't know. Merchant bankers and the promoters who all are involved. But it was very unhealthy promotion of a company leading to excessive valuation, which is now getting corrected. So I don't have any more comments about those companies in person. So it's, I don't know. It was definitely overpriced. Any sensible person would have felt it. And I think not only me, many others in the market, many smart investors, fund managers were warning public about the overvaluation of these companies. But still, it's a herd mentality. People who are first time coming to markets and all get excited, and just because of the name, they don't know about valuations. Whether Paytm is at 2 lakh crores valuation, 1 lakh crores valuation, or 10,000 crores valuation, they find the same thing. It's Paytm, it's an IPO, you buy it. That's how 50% of these new investors are behaving.
So any IPOs which are upcoming for this 2023 where you think you would probably look at, or probably, I'm not saying that's a recommendation of any sorts coming in from you, but maybe you'd look at the fundamentally, maybe you'd want to study back how the financials look like. Anything from your end?
I think recent IPOs, I was liking that Sula Vineyards. It's a big brand and reputation, but I think that price also has moved up. Investors have to be very much, aware and cautious about the valuation part of any company, whether good or bad. So another stock, I feel RBA, that Restaurant Brands of Asia, the Burger King earlier.
Right.
That came out with IPO some time back. I think there is a lot of value at these levels. The prices have come down. And that can be, I think, it's a very reasonably valued, it looks like. So very selectively there will be in most of the Bector's food, Mrs. Bector. So I like the company. We have been buying in PMS for the new clients in the recent past. Recently the prices have gone up a bit. So they all are, I think, reasonably priced, good companies. Some of these companies we are holding in our portfolio management. Bector's food we are holding in the PMS. Earlier I talked about Raymond's. As a disclaimer, I want to see even that is a stock we are holding in PMS.
Sure. Also, let's get on to a little lighter segment and just get on to the 10 quick questions that we have for you. And you get 15 to 20 seconds each to answer each of them. And it has to be really quick. It has to be really rapid with that. If not for a wealth manager, what your alternative career choice would be?
I am a half farmer right now. So I would have been a full-time farmer. I love farming and I spend a lot of time on that.
All right. Any stock in 2022 you regretted holding on to, or for that matter, selling off?
2022?
Yeah. 2022, any stock that you regretted holding on to, or for that matter, selling off?
I don't regret holding any companies, Nikki. No.
And selling off?
The mistake, especially when we do small cap investing, mistakes are bound to happen. That's why there is more risk and more return in that strategy of investing in small caps. And we are still doing it, even though we have some large mid caps and large cap also sometimes. So we don't regret anything. In 17-18 period, it's a known thing. We had invested in a company called Leel Electricals. Okay, this is one of the maybe 100 companies I have been known for, but a lot of negative people, they remember only this name, where we had a very significant, I would say almost the capital had gone. So it was very painful. So what is the point in regretting? We bought it and it happened. So it is.
So in 2022, let's not use the word regret. Let's just use the word. Maybe you were better off not holding that stock. Maybe something like that in 2022.
Everything was good in 2022. To be very frank, Raymond is the stock I am very feeling proud of. We hold over 4% of the company in PMS and AAF. So that has given, when everybody was selling off the stock in 2021 and 22 also we bought. So that has moved from 350, 400 to now I think some 1,500 rupees. And sure. I am still liking this business, which is around valued at around 10, 11,000 crores. Whereas I bought this stock only because of this IPO high valuation of Manyavar. Manyavar was planning an issue at around 20,000 crores valuation, I was told. But Manyavar has given return to investors since then, to be frank. I think today it is around 32,000 crores. So Manyavar is not bad. Even those who invested in IPO and who bought it later, they are also making money. But when I compare it with Raymond, I would prefer Raymond at that point of time, even today, on a valuation basis, and the potential for the future wealth creation.
Okay, so just staying on IPOs, Mamaearth and Oyo, which do you think is better off between the two?
Mamaearth
or Oyo? Which of the two IPOs will fascinate you more?
Oh, neither. I think it's risky. Come to the secondary market, listed companies.
Okay, you think Nykaa is going Paytm way? It's almost tanked 67% from the live fires. Any other category, in the same category, any other stocks that you think would be risky bet right now?
Oh, I'm not knowledgeable enough to, these two companies, analyze them or make a comparison. I know generally what they are doing about the valuations. Valuation-wise, both the companies are well priced today, I would say. I don't see any deep value in them. They may be equal in that aspect.
All right. Any other stock in that category that looks like a risky bet to you right now, and you'd want to probably stay off and not get into it?
You mean the new IPOs?
New companies that you think will be a little more risky bet right now.
Let us go to the less risky bets. now Tata Communication is also it's a technology company. They have been into voice and data infrastructure. It's my second largest holding in portfolio management. So I would prefer, among compared to some of these technology companies coming out with IPO, this is looking safer to me. But investors should be careful before investing. I'm not making a recommendation. We have been buying this stock last 2-3 years, and very comfortable. We continue to hold. It looks like a safe bet among technology, among new gen businesses. Other than their legacy business, Tata Communication is venturing into all the new gen futuristic technology businesses, solutions, global solutions. I think this is a stock to watch, and investors should be exploring it further.
Okay, out of the three themes, which theme probably looks more interesting at this point of time between the defense, infra, and probably within the infra railway segment? How would you look at the three themes? Which looks interesting to you?
I feel infra is more interesting. Defense, of course, already had a big run on a comparison and on a valuation basis. Some of the infrastructure companies, I think already this many fund managers have been talking about it. Many mutual fund managers are buying. So I think they have been suffering in the last 10-15 years. There was no fancy, and people were selling off those companies, and some of them are available at very reasonable, attractive valuations. And we are talking about huge capex, private and public, in infrastructure. And this budget also definitely will be giving many indications in that regard. I feel infrastructure is preferred among the three.
And within that, what's your preference? Would you go something for more of an road infra, or something more of which segment would you prefer within that?
Infra and in general. Actually, we don't have that super specialized large infra companies. Now L&T is doing everything. And right. Mostly companies now, we have a holding in J. Kumar.
Right.
It has been always at low valuations because of the perception in the market. But they are doing a good job. I think significantly large company with strong balance sheet. I'm not recommending the stock, but
sure.
It's one of the solid stocks.
Not a recommendation of any sort. It's just for a matter of discussion that we've been talking about these stocks. And quickly then, what's your stress buster?
Farming again.
Your market guru.
Yeah, it's I think it's I live in Cochin, and after my decade of career in Mumbai, I left Mumbai in 1999, and I found living in a city like Cochin, and you go for the weekend to the village somewhere where your birthplace is, native place. So that kind of a lifestyle is so relaxing in today's busy world. I'm enjoying it, and that's really a stress buster. I do work in my farm. It's 1 hour drive from the city.
How about your market guru? How about your market guru? Someone that you look up to for inspiration, or sometimes when the times are dark, you would probably follow their strategy. Someone that you learn from.
Chandrakant Sambat is considered to be my market guru. I had the privilege to interact with him, and since 1990, when I was in Mumbai, then I had more interaction with him since 1993 when I joined Parag Parikh Financial Services. In those days, it was Parag Parikh Securities. So he used to be in the office every day. He used to talk to me about the Nestle Indian shaving products, which is today's Gillette, and Colgate. So he used to make me buy shares for him. I used to go to the trading ring in those days, the outcarry system, representing Parag Parikh and earlier Uday Kotak.
Sure.
So I learned a lot from him, but I used to disagree with him in a big way because I had a gambler's mind also, a little trading kind of mind. I used to enjoy it. Right. You won't believe, suppose I invest in a stock and hold on for 3 years and make a lot of money. Maybe my, say, 1 lakh become, say, 5 lakhs. But I get more kick when I do a trade in the sense not for holding long term, some idea comes, some corporate development happens, and I guess what could be the impact on the stock price because of this corporate development. I do a trade, uh, and it goes up maybe much less money I am making, but I get a thrill, I get a kick of doing that speculative trade. I love that. I still do it.
With that in mind, value investing versus growth investing, what do you think would you prefer now?
Of course, value investing, Nikki. I love. I strongly believe in that. That basic discipline of investing is required. See, when I say about trading or speculative trade, it's one aspect of my life. But our focus as an organization and create through the bottom-up approach, identify smart companies which can grow very big in the future, which can be multi-baggers. So the structure of Indian economy is so much of helping that kind of investment strategy. So we believe and we continue with that kind of value investing strategy.
3 stock ideas that you'd like to leave our viewers with. Just 3 of them.
Idea?
Yeah,
stock?
3 stock ideas that you would like to leave our viewers with.
So I think I mentioned that what I can say is my top 3 holdings in equity intelligence portfolio is Raymond first, Tata Communications, and Hindware. So we still believe in this story, and these are our holdings. We may sell at some point of time. So there is no point in investors just betting on these 3 companies as it is, but explore, study about the valuation, and if you find, I think that kind of, if there is a company which is perfect, wonderful promoter, highly ethical, like Narayana Murthy kind of a promoter, and excellent industry, everything is fine, it's going to be big growth, and all aspects of the company are perfect, then I will not invest in that company. Because then that stock will be already priced to that level. And
sure,
I don't find any fun in doing. There is no fun.
You go for hidden gems and not something which is known. That's precisely why I ask you that outside your portfolio, what are you looking at? And the 3 gems that our viewers can have now.
No, these 3 stocks have many weakness. There are pockets of weakness for these companies, aspects. So that's what I was telling. We don't have a company where everything is perfect. We don't like such companies.
Sure, we'll leave it at that. Thank you so much for taking out the time and speaking to Moneycontrol. Thank you.
Thank you so much, Nikki. All the best.
1st February 2023, the Finance Minister Nirmala Sitharaman will present the last full union budget before 2024 elections. India's most awaited financial event comes in the midst of global slowdown, inflation, liquidity tightening, geopolitical tensions, and re-emergence of COVID-19. Will India look to fire up its manufacturing? Will India build a moat against global uncertainties? What will the budget have for the middle class? Watch the complete coverage of Budget 2023. Real-time analysis, expert takes all day on Moneycontrol. Log on to www.moneycontrol.com for more.